Now I'm going to show you the biggest change that we've had this year, and that centers around the My Tax Office customer portal. So we've created a customer portal that will allow your customers to go online, review their documents, sign their documents, submit their documents. The same functionality as the My Tax Office mobile app is now available in a website format. So you can see here in the My Tax Office, we've already checked everything. We can view everything that's happened. We can lock an account out. Let me show you what that login looks like. So here's the login screen for My Tax Office. So I already have an account. To create an account, you'll go to that screen on a customer, and I will show you guys how to do that real quickly. So we're going to create a quick return just so I can show you guys this. We'll just save and continue. We're going to enter some information. I'm going to let this autofill as much as I possibly can. I think I'm missing the date of birth here. What else am I missing? Oh. So this is interview mode. I'm going to go ahead and log out of this because we're not going to go specifically into this return. But from this client manager screen, if you want to get a customer signed up for the portal, you go to My Tax Office, and then you're just going to send to them this email. So you do send link. And what they're going to get on their side is an email that looks like this. It's going to say, Client Portal Account Creation, Dear, and they're going to click this link to create the account. Now when they create the account, it is going to verify their identity with their name, first and last name, their social, and their date of birth before it will let them create an account. So I already have an account created. Two-step factor verification is required, so they'll create that when they first go through. And then this is what the two-factor gives. It gives you a 6-digit number that you've got to enter into the portal. So inside here, they can see what's going on inside their return. If they need to edit information send you documentation, they can do that. This shows them the status of the return as they go through this process. They can preview the files in the view print. So you can see they can look at the postseason letter, and all of these things will be tagged with preview watermarks. They go to the document manager, and this will allow them to upload any documents that they have. They just enter a description, what the type is, and then click the little icon here to actually upload that document, whatever it happens to be. Typically PDFs, images work really well too. They can add more. They just do upload. Okay, so that's all that is. The signature. E-signature will be available once the return is selected as a preparer reviewed and customer reviewed. Okay, so they'll get the option then. They can sign using their mouse, or if they have a touch screen, they can sign using that. Messages allows you to send and receive messages. So if we want to so it allows the customer to send a message directly to the tax preparer, and when we log back into this software, we'll go to the clients. And it should come up on the dashboard. You can go to view messages always here. So if you go tax return, you can see all of these. This allows you to send messages. This view messages allows you to, for us to send you messages, but also allows you to send messages between accounts. Okay. Your client messages are going to show up on the actual client information. By going to My Tax Office, you'll see the status of this message, and you can review it, and you can reply. So if you're requesting a signature, if you want to request a document, you can do that. you want to send a message to your client regarding document upload? Yes. And then you can send that message from there as well. Same thing with request review and request signature. That's all part of this process, okay? But the client portal is a great new tool for your clients to be able to access this information from a website as opposed to using their mobile application if they choose not to. They can still use the My Tax Office mobile app. That works functionally the same. We've done a lot of upgrades on that to allow for signatures this year. So I encourage you, if you haven't tested that out, download that app and take a look at it. Okay, we're going to go into a return, and I want to point out a couple of things that we see we get calls on. So I want to make sure that everybody understands what it is. Okay, the first thing involves Schedule Cs. So we're going to use the direct input so that we can take a look at this. On this side here, you can see this file form. So we're going to look at this 1099 miscellaneous. So when you have a client that has a 1099 miscellaneous and it needs to be reported to a Schedule C or a Schedule F, when you create that from this screen, and you'll complete this screen exactly as it appears, but down at the very bottom in this reporting section, we'll give you the option to choose where it's reported to. So in this case, I want this non-employee compensation from box 7 to be reported to the Schedule C. So I choose Schedule C, and then if you have multiple Schedule Cs, you can click Pick from List, and it will give you which one. I only have one, so I'm going to click Use. This will ensure that your income does carry over to the Schedule C correctly. If you bypass that, what will end up happening is your Schedule C will show no gross sales. And then your reporting is going to be considered, your refund amounts are going to be off on this. Okay. One of the other things that I always point out in here is this section on the right-hand side here that is useful links. These are all of the instructions and copies of the forms for everything related to the form that you're on. So these will change. So right now I'm on a Schedule C, so you'll see Schedule C Profit Loss Business. And when I click it, it's going to take me to the IRS pub for that. The IRS is already updating publications, so you can see Schedule C for tax year 2019 is already out. When we go back, if I go to 1040 the 1040, you'll see that these useful links on the right-hand side change. There's also a search on this side. So if I type in sale of a home, it's going to open a search with the IRS so that you can get directly to the IRS and start running your searches from there. All of these on the right-hand side at the bottom section in this form section will allow you to preview the return that you've created. So whatever form it is you want to look at, those things will come in. Now some of these forms have changed for this year, and we're going to talk about that next. But I wanted to show some of these things. Now the last thing that I want to show, oops, I don't have a joint return in here. Let's go create a joint return so that I can show you, and actually the key piece for it is, I'll just change this one. The key piece is married filing separate if you're in a community property state. We get this call quite often about asset allocation or income allocation. So we're going to change this particular return to married filing separate. Okay, and then we go down here to the bottom, we're going to hit save. I have Texas address here. Yes. So when we verify here, we should get a message about the 8958 because Texas, for example, is a community property state. There are others, but in order to get the income to work correctly, you do have to fill out this 8958. So we're going to go to all forms, or we can run up here in this search and do 8958. This is allocation of tax amounts between certain individuals in community property states. Again, this form only applies if you are in a community property state and this form is required. So it's not always required, but you want to make sure that you look at the community property law pub here to be sure. If you feel like it does and you want to disregard the community property law, you can check that and that'll bypass. But if you say yes, then you have to make sure that these are allocated correctly. So this is already split, and if you watch, when we save here, it's going to do that piece automatically for you. But I have, so you'll see that that deduction went down and that taxable income went down. This was a married filing joint return. It would add all of those things together. This is an important piece to see if you're getting a verify error about the 8958 because it is a community property state. The program by default does identify married filing separate. It says, hey, you need this form if you're in a community property state, but it doesn't always apply. So check that publication 555 to be sure. The next thing I want to point out is this DM docs. So DM docs, you can see I've got things here. And I'm pointing this out particularly because if you want to save signed copies of the return, you can in DM docs, but it comes from the view print. So inside here, I don't have a view print here because of this isn't, oh, there, view print. There's an option at the bottom to export these to the document manager. If you want to save copies of the return as it was signed or when it is signed, you do want to do export to document manager. That will put those documents in this DM docs like you see here. Okay. The last thing that I want to point out is this notes section. This is hugely, I have found this to be an extremely helpful tool in staying compliant with EIC. When you have EIC and I really just say due diligence requirements because that applies to EIC, child tax credit, head of household filing status, and the American Opportunity Tax Credit. This is a great place for you to enter the questions This is a great way for you to keep track of the questions that you asked and the responses from the taxpayer. This is important information for you to make sure that you maintain, in addition to any documents that they provide to you showing residency, showing disability if that's what qualifies. And then you just click Add Notes, and these notes will stay, and they can be edited, they can be viewed later, and you can see them here. So I always recommend that piece too. So now we're going to transition a little bit, and we're going to jump into this presentation of tax law updates. So tax law updates for 2019. There are some changes. There's a couple of new forms and some slight modifications to the Tax Cuts and Jobs Act that went into effect this year that were not in effect last year. So the ACA individual mandate, so the penalty, also called the shared responsibility payment for not having health insurance, no longer applies for tax year 2019 returns. Congress did not eliminate the individual mandate, but they reduced it to 0, which effectively eliminates it. However, there are some states that have their own individual health insurance mandates, requiring citizens in their states to have qualifying health coverage or pay a penalty, a fee, a shared responsibility payment with their state taxes for the 2009 tax year. As of now, we know Massachusetts, New Jersey, and Washington, D.C. are the only states with health insurance mandates and penalties for 2019. Vermont does not go in effect until 2020, so not this tax year, but next tax year. The IRS has launched a new form. It's called Form 1040-SR, and that's for senior citizens, so age 65 and older. This is part of the Bipartisan Budget Act of 2018. The new form is a simplified version of the 1040, very similar to what we used to have with the 1040-EZ. However, there's no income limits or restrictions on types of income like we saw with the 1040-EZ. The exception to that particular piece is that they cannot file the 1040-SR if they are claiming itemized deductions. So if they have a Schedule A, it'll transfer to a 1040 form, a full 1040 form versus the 1040-SR. So if they're using a 1040-SR, they do have to claim the standard deduction. The supplemental schedules, schedules 1 through 6 that we had last year, have been redesigned, and now we have schedule 1, 2, 3. So they've combined schedules 1 and 2, 2 and 3, 3 and 4, that kind of thing, so that we can get to 3 schedules. I'm going to show all of the new forms at the end of this. Here's the 2019 tax brackets. We haven't seen a big shift or change. Honestly, it's about the cost of living increase and inflation increase. Nothing groundbreaking or earth-shattering in terms of the tax brackets or the capital gains brackets, honestly, or the earned income tax. I know this is an important screen. This presentation will be available on the university website in a class format for an e-learning platform that we're launching in the next couple of weeks. So stay tuned to your email for that. The income at max credits is there. I know the big part is the maximum credit. This is a big thing for marketing. The maximum credit this year is $6,557. I point this particular out because this is a filing status for head of household and the phase out. This is where we get questions about why EIC isn't calculating on a particular return, and it's because the phase out begins at these amounts here. So if they have 0 dependents, for example, and are filing single, the phase out for EIC is $15,570 in income, taxable income, and that expands all the way up to $50,162, and for married filing jointly, it starts at $21,370 and it ends at $55,952. So if their income is over $55,000 and they have 3 dependents, or $56,000, we'll call it $56,000, they're not going to qualify for EIC at any dollar amounts. Child tax credits. Now, there was a huge shift and change in child tax credits last year. So I'm going to point out a couple of things that we found out as the season progressed with child tax credit. Now, we know the child tax credit is $2,000. $1,400 of that is refundable. So you have $600 non-refundable credit that must be applied first, then $1,400. So your customers are not going to get $2,000 cash. So understand that the max that they would get in a refund to them is $1,400. The credit for other dependents is not refundable, which means non-refundable credits can only be used to reduce the amount of tax a taxpayer pays. Refundable credits can be refunded back to the taxpayer. So the credit for other dependents is completely non-refundable. So 2 important notes. In order to claim any portion of the child tax credit, whether it be the refundable or non-refundable, the taxpayer must include a Social Security number for each qualifying child. So the taxpayer can have an ITIN, but the dependent must have a Social Security number in order to claim child tax credit. Now, in order to claim the credit for other dependents, they can have an ITIN, but they must be either a U.S. citizen, a U.S. national, or a U.S. resident alien. That means legal U.S. resident alien. That is an important thing to note because we used to be able to claim dependents that lived in Canada and Mexico. That is no longer the case. Standard deductions amount went up $200 a person. Head of household went up $350. That's really the difference there. As a reminder, for tax years beginning after December 31st of 2017 and before 2026, the deduction for personal exemptions is effectively suspended by reducing the exemption amount to 0. So their personal exemptions are still gone, and they will remain gone until the 2026 tax year. So IRA contribution limits have increased a little. They are now at $6,000 with a $1,000 catch-up amount for taxpayers over age 50. HSA contribution limits have also increased to $3,500 for self-coverage and $7,000 for the family. 401k contribution limits has also increased to $19,000 and $6,000 for taxpayers over 50 making catch-up contributions. Taking advantage of these high limits will decrease your taxable income. So hopefully your customers did this last year. If not, this is something that you can coach them on in the coming year. As a reminder, entertainment expenses directly related to a taxpayer's active trade or business that are no longer deductible. So as of tax year 2018, they can no longer use golf outings, fishing trips, sporting event tickets, theater tickets, things of that nature, and really, generally speaking, all entertainment expenses for deduction. This does apply to your corps as well as your Schedule C clients. Alimony payments. So for a divorce decree signed after 12/31/2008, if the alimony payment is required, the payer of the alimony payment is not allowed to take a deduction for those payments, and the person receiving the alimony payments is required to claim the alimony as income. So they will have to pay taxes on alimony payments moving forward for any divorce decrees that are signed after 12/31/2018. So if they sign their divorce decree this year, this tax year in 2019, these rules will apply. Everyone prior to that is grandfathered in. A couple of changes to standard deductions. Some of these we saw last year. I just want to remind people. The medical expense AGI limit did go up from 7.5% to 10%. Mortgage interest. Now, grandfathered loans, so loans entered into before December 15th of 2017, can still claim mortgage interest credits. New loans, the max is reduced to $750,000, so the max that they can take in mortgage interest is $750,000. There are no mortgage interest for equity loans anymore. SALT, so the state and local tax deduction and limits. So taxpayers can claim an itemized deduction of up to $10,000 for state and local taxes and property taxes paid while conducting a trade or business, such as rental property. That is not capped at $10,000. So they can take those state and local deductions on a Schedule E, but they are capped on a Schedule A for taking those. Charitable contributions, the 50% AGI ceiling has been increased to 60%. So now the cap on charitable contributions is 60% of the taxpayer's AGI. However, charitable deductions for contributions in exchange for college athletic event seating is denied. They can't consider season tickets to Alabama football as a charitable contribution deduction any further. Casualty losses is very important as we've had hurricanes and fires and other assorted things over the last 2 years in particular. Casualty losses are limited to losses declared a disaster by the President of the United States. So there's no more theft, there's no more fire, there's no more storm, there's no more shipwreck or other casualty losses. Only those in a declared disaster by the President. So if we had a hurricane and the hurricane is declared a national disaster by the President, those would qualify. If your house catches fire and burns down, it won't any further. This one, I got a lot of calls. Our team got a lot of calls, so I want to highlight this particular piece. Suspension of the miscellaneous itemized deductions subject to 2% of the AGI. So, Tax Cuts and Jobs Act eliminated the ability for employees to deduct non-reimbursed or unreimbursed work-related expenses. Example, unreimbursed business mileage as a miscellaneous deduction for taxable years 2018 through to 2025. This basically eliminates the Form 2106 for most of your taxpayers, if not all of them. So those non-reimbursed employee expenses or unreimbursed employee expenses are eliminated until 2025. So the suspension of the overall limitation on itemized deductions. So beginning after 2017, the phase out for higher income taxpayers does not exist. There is no cap on the amount of itemized deductions that you can take any longer. AMT. So we saw about a $1,400 increase across the board for AMT for the exemptions. The phase out went up about $10,300 per person. We got this call quite a bit as well. Moving expenses are suspended, and they will remain suspended until after 2025, except for active duty military personnel who have an order to move. It is important to state that they have an order to move. If you have an active duty military member who's living off base and moves to the other side of town, that doesn't qualify. If he's ordered to move from one base, to be stationed at one base and then move to another base, that could qualify, but you're going to want to check those expenses and make sure that he has an actual, he or she rather, has an actual order to transfer bases. Section 199A. So this is the QBI. So Section 199A allows taxpayers other than C Corps, and this is important, if they're filing an 1120, anything other than the 1120S, they're not going to qualify here. Deduction, it allows them a deduction of 20% of qualified business income earned in a qualified trade or business. There are limitations. This is important to note because this is a question that we got quite often last year. The deduction only applies for income tax purposes, not for self-employment tax. So your Schedule C people will pay income tax on their full net profit on that income. This QBI will not affect the Schedule SC. So Section 199 applies to sole proprietorships, partnerships, S corps, and some trusts and estates. Okay. There are two components to this. There's a QBI component, and then there is a right opponent, and I'll show you both of those. QBI, this component of the deduction equals 20% of the QBI from a domestic business operated as a sole proprietorship, partnership, S corp, or a trustee or estate. So depending on the taxpayer's taxable income, the QBI component is subject to multiple limitations, including the type of trade or business, the amount of the W-2 wages paid by the qualified trade, and the unadjusted basis immediately after acquisition, UBIA, of the qualified property held by the trade or the business. It may also be reduced by the patron reduction if the taxpayer is a patron of an agricultural or horticultural cooperative. Income earned through a C Corp or providing services as an employee is not eligible for this deduction. So the right in the PTP, okay, so the right is a real estate investment transaction, and PTP is patron tax something. I have the later. So this component of the deduction equals 20% of the combined right dividends, including right dividends earned through a regulated investment company, so a RIC, and qualified PTP income. So this is a combination of both. This component is not limited by W-2 wages, in particular for corps, or the UBIA of qualified property. Depending again on the taxpayer's income, the amount of the PTP income that qualifies may be limited depending on the type of business engaged by the PTP. So this deduction is limited to the lesser of the QBI components plus right PTP component, or 20% of the taxpayer's taxable income in the net capital gain. There's a lot here. Okay. Now, what's important to note is this expires in 2025. So tax year 2025 is the last one unless Congress re-ups this Tax Cuts and Jobs Act. The deduction is available regardless of whether an individual itemizes or takes a standard deduction. So what is QBI income? These are direct quotes from the IRS. So the net amount of qualified items of income, gain, deduction, and loss with respect to any qualified trade or business of the taxpayer, plus the gains and losses on dispositions of assets used in the business if tax law treats those gains as ordinary income or ordinary losses. The exclusion part here is important. Short-term and long-term capital gains, interest income unless earned in the actual trade of the business, and C Corp dividend income. This is important. Long-term capital gains, so when we're talking about long-term capital gains, we're talking about things that go on a Schedule D, whether it's short-term or long-term. Schedule B is interest income, and C Corp dividends is typically Schedule K. Those things, or K1, those things are not going to qualify as QBI, as qualified business income. I'm not going to talk to you guys about which is which and that piece. We're going to jump ahead a little bit to the new forms. So taxpayers who have QBI, right, dividends, or qualified income from publicly traded partnerships, so that PTP, will use new form 8995, Qualified Business Income Deduction Simplified Computation, to report the computation for this year. So the simplified worksheet is probably going to apply to 99% of your customers, I would guess. Form 8995A is going to be for the more complex QBI computations. So Section 199A, there is some requirements here. Section 199A says that the QBI needs to be effectively connected with the conduct of a trade or business within the United States. Inside the United States, kind of, I have it in quotes because there's still some gray area on that. So if you're not sure, I would reach out to the IRS directly and get an actual answer. Now, these qualified business incomes are the things that we've talked about. Qualified business income, rental income applies, W-2 wages, basis of depreciable property. Okay? You can always learn more information at SimpleTAX University. That's where you guys registered for, where you guys can register for our classes. We have a tax prep boot camp that is there as well. We have quite a few things that we're getting ready to launch on there, so stay tuned to your email for those things. I'll show you guys these new forms. So here's the 1040 SR. You see, it looks just like a 1040. It's not anything particularly special. It does have bigger font, but everything else pretty much looks the same. There's not much difference in it, but it is a shorter form. Okay, here is the new 1040 schedules. So we had gone from Schedule 1, 2, 3, 4, 5, and 6. Now we just have Schedule 1, 2, and 3. So this is Schedule 1. This is where you'll find additional income and adjustments to income. So your educator expenses are now on Schedule 1 versus Schedule 2, that kind of thing. Schedule 2 is all about additional taxes. So Part 1 is AMT or excess premium tax credit repayment. Part 2 is going to be other taxes like self-employment tax or unreported Social Security, okay? Schedule 3 is additional credits and payments. So this is where you're going to find your non-refundable credits. Majority of your refundable credits are going to show up on the first page of the 1040. Non-refundable credits will show up here. And then other payments and refundable credits. So now I'm going to show you guys, excuse me, the 8995 and the 8995A. So here's the qualified business income deduction. This is the simplified version. I want you guys to take a look at it so that you know what you're going to see this year when we get. These are all draft forms. They are not finalized, so there may be some modifications to them, but generally speaking, this is what the 8995 will look like. And then the 8995A, you'll see is significantly bigger. There's more information required to do. So we're going to talk about growing your business using social media. So billions, yes, billions of people visit social media websites every single day. Facebook has roughly 2 billion active users on Facebook at any given time. Social media is one of the most powerful ways to grow your business, and we're going to talk about the ways to do those. Social media allows you to attract new customers, connect with audiences that you never would. You can get your brand in front of a vast audience, and you can establish yourself as a thought leader in your industry. This is particularly important for tax preparation. I think what a lot of tax preparers fail to understand on a regular basis, honestly, is that you're not selling the service of tax preparation. What you're selling to your customers is your expertise. You're selling your knowledge. You're selling your experience. They can get tax preparation anywhere. They come to you for those other things. So this raises some important questions. What's the best platform to use? What tactics should you use to be seen by the most people? Are there certain types of content that perform better than others? How can you regularly post content? And what are the etiquette rules you need to follow? In order to build your business through social media, you need to have a strategy. Without a plan, without a definitive plan for how you're going to use social media, you probably won't get the results that you want. I'm not even going to say probably. I'm going to say you absolutely will not get the results that you want. So in this workshop, we'll discover an effective step-by-step social media strategy for building your business. So the first one is to choose your platforms. Not every platform applies to every type of business. So in order to do this, you need to know your audience. Where do they spend most of their time when it comes to social media? Where do they like to interact with brands and businesses? What sites influence them to purchase? Who are the biggest influences in your space? And what I mean by space is your industry. What platforms do they use? You want to be, and you need to be, where your audience is. If you publish primarily on platforms where your customers don't spend time, they'll never engage with what you post. If you don't know where your audience spends most of the time, most of their social media time, simply ask. This is about as simple as you can make it. Ask your customers where they spend their time. Do you use Facebook a lot? Do you use Instagram? I will tell you this, one of the things I've learned as a social media strategist over the last 2 years in particular is that generationally there's a divide. Facebook is the most popular platform in the world, but it's predominantly most popular with the generation between ages 28 and 48. The younger generation typically stays off of Facebook. They have one, but they're not nearly as active as they are on things like Instagram or Snapchat. Which of your posts have gotten the biggest response? So if you have a page and you are posting, go look and see what people are engaged in and responding to, and post more of that type of post, whether it be a video or a poll or a question. So one of the other things to consider when choosing your social media platform is what you're selling. And like I said earlier, what you're selling is your expertise, your experience, your knowledge. The best place I have found for tax preparers to do that is on Facebook. Facebook attracts the most audiences for this type of business. Think smaller rather than bigger. And what I mean by think smaller rather than bigger is you don't want to post on 1,000 platforms. Being everywhere is basically the same as being nowhere at all. So, of course, you can always fall back on Facebook. Facebook is a big thing. So the base for any social media strategy starts with Facebook and expands out from there. Snapchat would be okay. Instagram. You just want to make sure that you're posting relevant content, and we're going to talk about that. At the end of the day, what matters most is not that the particular platform you choose, but rather that you choose one and you stick with it. It is detrimental to your growth on social media to have a platform you do not post on. Optimize your social media profile. So we're going to talk about a couple of things that you can do, in particular with your Facebook profile. Select a professional username. For example, all of ours is our company name. So if you're setting up your page, use your company name. Don't use a personal name. Don't use a nickname, that kind of thing. You want to stay as professional as you can. For Facebook, set up a professional page, not a personal profile. You will not be able to take advantage of all of Facebook's utilities and tools and features for businesses from a personal profile. Try to keep the username across all social media. For example, ours is SimpleTAX, and then on Facebook it's SimpleTAX Services, on Instagram it's SimpleTAX, on YouTube it's SimpleTAX Services. Try to keep it as consistent as you possibly can. That gets tricky sometimes, but you want to try to stick as close to the same username across. It'll make it easier for your customers or prospects or potential customers to find you. Use a high-quality profile photo. Your profile photo is one of the first things people see when they click on your social media profile. So whether it's a picture of yourself or a logo, you want to use a high-quality image. You don't want to use one that's blurred. If you need to have a logo designed, Fiverr and Upwork and our company, First Solution, are all great places to start. Write a compelling about section. What is it that you do that sets you apart from everyone else who offers the same services? So why are you better than every other tax office? Include links to your website. If you do not have a website, get a website. First Solution can help you with that. You can visit them at firstsolution.tech. Include links to your other social media profiles. It's called platform sharing. And any other relevant links. Where's My Refund is a good one to include in your Facebook profile because your customers are going to go there. So instead of directing them to Where's My Refund to find out their refund status, direct them to your Facebook page, and there they can click on the Where's My Refund. Upload a professional cover photo. So if your business has a slogan or a motto, consider putting that slogan on your cover photo. And that cover photo is that top section of your page. So your profile photo is the little box. Your cover photo is the top. Facebook has now started allowing cover videos instead of a photo, which is a phenomenal way. Videos are typically far more engaged in than pictures, and certainly more than plain text. Enter all of your contact information. You want to make it as easy as possible for customers and potential customers to contact you. Be professional. I cannot stress this enough. How do you want to represent yourself and your business online? It's a question that you need to find the answer to. Okay. Create a posting schedule. This is step 3. Create a social media calendar. So a social media calendar is a calendar that it's like a regular calendar, but you're using the days to plot out what you're going to post, what topic, what type of content that you're going to post. So when you're creating your social media calendar, ask yourself the following questions. How often will you post? Do you want to post once a day? Do you want to post twice a week? Do you want to post once a month? I will tell you, for tax preparers, for tax offices, my recommendation is no less than twice a week from November and December. January, it should be every 3 days. February should be every 3 days. March, you can do about once a week. April, you want to ramp back up and start posting every 2 or 3 days. And then after that, you can get away with one post a week or one post every 2 weeks, twice a month. What formats will you use? And by formats, they mean photos, videos, polls, graphics. And then what sort of content will you post? What do you want to post? Tax law updates? Do you want to post what the office is doing? If you're renovating, these are the things that you want to figure out. What sort of content do you want to post? For example, around August, you may want to start posting content about education credits or child tax credits or child care expenses when you get to the summer months. So you may be thinking, why do I have to map all this out in advance? Why can't I just start posting whenever I want? You can, but using a social media calendar helps you be consistent with posting, and it allows you you get to do all of it first. So you get to do all that hard work of figuring out what you're going to post up front. It makes posting a lot easier, and it forces you to be active on social media because you said, this is in my calendar, so I'm going to mark this off that checklist every time it pops up. Begin posting. That's step 4. Start posting. It's important to constantly post things that will add value to your audience. Now, what I mean by constantly is when you post, you want to make sure that you post things that add value to your audience. For example, if you're a tax office in Florida, but you happen to be a New York Yankees fan, posting about the Yankees game last night is probably not adding value to your audience. Posting about tax law changes or potential things that Congress is investigating or looking into or proposing in bills, those things may add value to your customers in a greater way. So your posts should help your audience to think about something in a new way or take an action they may never have, laugh or smile, learn something valuable. One of those 4 things every post should do. That should be the objective. If you know your audience well, you know what they'll find most valuable. So knowing your customers and your potential customers well, you'll know what they find most valuable. And they will often tell you on social media by their engagement and what they find most valuable. So consider posting things like inspirational quotes, tips and tactics, tutorial videos, live videos, pictures that are going to motivate your audience to do something, to better their lives, to improve their relationships, but at the end of it, generate revenue for you. For example, let's say you're a professional tax preparer, which you are. When creating your content calendar and posting on social media, ask yourself, is this adding value to my audience? Is this something that my customers are going to learn from? Is this something that's going to increase my value to them? Experiment with different formats. Don't just stick with plain text. Try video, try graphics, try using things like Canva to create inspirational messages or things of that nature. You may be thinking, I don't have time to constantly post, which during tax season you certainly don't. However, Facebook in particular has a thing called scheduled posts. So you could sit down at one time in November and plot out the things that you want to post and schedule them months in advance, and they will post automatically for you. That leaves you free then to post things that are breaking news. Engage with your followers. Conversations are the key to getting more clients through social media. Talk to your clients. They don't want to feel like this is a one-way street. It is not. One of the things that matters most when it comes to social media is that you feel authentic. People want to know that you're a real person, that there is a real human being on the other side of this profile, of this page. Authenticity is attractive, and I don't mean in a physical sense. I mean it's attractive to buyers. Social media platforms tend to prioritize the posts with the most engagements as well. So the more you get your customers to engage in what you're doing, the more likely it is that you're going to see more customers or more potential customers. So you must talk with your followers, create conversations, answer questions, respond to any problems that are raised. The number one thing that I see with bad social media profiles, is someone will post a complaint or a negative review and they will not respond, or they will remove that if they have the ability to. Do not remove it. Respond if at all possible. If it's something that requires privacy, ask them in your response there if you can take it offline. Say, hey, can I give you a call so that we can sort this out and make this right? But be sure when you come back that you post or ask them to adjust their review. That's an important piece that people forget. So you'll still sit out there with that 1-star review for somebody who's very happy with what you were able to provide. Your goal is to create real relationships with your audience. Here's the truth. You can buy followers. There are programs and services out there, and you can have 10,000 followers, and that's great. But 10,000 followers that you paid for that never buy anything that you sell, or never do their taxes with you, is a waste of money. I would much rather have you had 1,000 followers that were all doing business with you. So, how can you create conversations with your followers? Ask questions. Do live videos in which you talk to your audience. Conduct polls. Ask others to comment on a particular topic. Make statements that will get people talking, and then focus on being real and authentic. Follow the right people. Follow influencers in your industry, like SimpleTAX. So if you're not following SimpleTAX on Instagram or on Facebook, you should be. Join groups. Facebook is notorious for groups that are related to tax preparers. There are literally thousands of groups. Take note of the valuable information that others are sharing. So if you see SimpleTAX is sharing information and you feel like it could be relevant to your clients, take note of that. Feel free to share it. You should share it. Additionally, what sort of content seems to get the best response? So look at people like SimpleTAX, like the banks, and see what kind of content we're posting that gets the best responses. Take advantage of a platform that focuses heavily on answering questions that are posed by users. Facebook is particularly good about this. If you let your clients post to your page, they can, it will get, you have the ability there to answer those questions publicly. Use hashtags. So hashtags are words with a pound symbol before them. Those that are over the age of 30, call that a pound sign. We don't know what a hashtag is, but this is what a hashtag is. So here's some examples of hashtags that you can use. Hashtag motivation, Monday motivation, tax day, hashtag tax pro, hashtag where's my refund. Hashtags are used as a way of grouping posts by subject. Some sites, such as Twitter, highlight the most popular hashtag, giving you a sense of what's trending at any given time. The power of hashtags is that they allow you to get your content in front of a broader audience, because people will search hashtags, or they will click the hashtag that maybe somebody else has used and find your post or find your content. So how do you use hashtags? Well, here's an example of something that you can do that you can use these hashtags in the right way. So before you file your taxes, spend at least 10 minutes getting your income documents and receipts organized. Hashtag tax day, hashtag tax pro, hashtag tax refund. You want to put your hashtags at the end of your post, typically, or if you're really clever, you can put those in your post. So for example, I could have written this as before you file your hashtag taxes, spend at least 10 minutes getting your income documents and receipts organized, hashtag tax pro, hashtag tax day, right? Be aware, if your hashtags aren't really related to the content of your post, you could turn people away, and you will. This is one of my biggest frustration points, is people will look at Facebook, will look at Twitter, will look at Instagram, and see what hashtags are trending, and then put those hashtags in their post that has nothing to do with it. I saw one the other night in the World Series. It was hashtag World Series, and I saw the post was about selling hats that had nothing to do with baseball or the World Series. You're trying to artificially manufacture an audience for your product, and you're most likely just going to turn those people away. So get help with hashtags. These are some websites that can help you, some companies that can help you figure out what are the best hashtags for you to use. All hashtag seek metrics, tailwind, and in grammar. Experiment. Different types of content will resonate with your audience. So experiment with your content. Experimentation is especially critical since social media platforms are constantly changing. Be constantly testing to see what works most effectively, whether it's photos or Instagram Live or YouTube Live. So the advantages of using social media are enormous. It's not particularly complicated to get started building your business through social media. You don't need to be intimidated by social media. This is the number one set that I see is you've got to overcome fear or overcome technical, being uncomfortable with the technology of social media. You don't need to do that. There are companies out there that can help you navigate social media, who can teach you how to navigate social media. First Solution is one of those companies. So you don't want to wait any longer. There are clients out there just waiting for you to find them.